This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending July 16th, 2022. Our question this week is, what is earnings per share? The answer will be provided later in the video. This week the market ended lower. The Dow Jones Industrial Average increased 2.15% on Friday but was down minus 0.16% for the week. The S&P 500 increased 1.92% on Friday but was down minus 0.93% for the week. The Nasdaq increased 1.79% on Friday but was down minus 1.57% for the week. Looking at the week, we can see that there were 11 down finishes versus 4 up finishes for the major indexes. On Monday, Tuesday, and Wednesday, all the major indexes finished down. On Thursday, the Dow Jones Industrial Average and the S&P 500 finished down while the Nasdaq finished up. And on Friday, all the major indexes finished up. The new unemployment claims were 244,000 versus 235,000 expected. Inflation rose 9.1% in June. Retail sales rose 1% in June, which was slightly better than the 0.9% expected. Wholesale prices shot up nearly 11.3%. Americans are paying record high prices for new vehicles. Home buyers are canceling deals at the highest rate since the start of the pandemic, and gold fell for the 5th week in a row. New unemployment claims, inflation going up, retail sales rising, wholesale prices increasing, Americans paying record high prices for new vehicles, home buyers canceling deals, and gold falling for the 5th week in a row are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is earnings per share? Earnings per share is the monetary value of earnings for each outstanding share of a common stock of a publicly traded company. It is a measurement of the corporation's profitability. It is how much money each share of a corporation makes. Some corporations may make a lot of money in total or generate a lot of revenue, but they may make very little or even nothing per outstanding share. Earnings per share is calculated by dividing net income or net earnings by the total number of shares of the company that's on the market. Many times the average number of shares are used in the calculation. The earnings per share is usually a moment captured in time. Thus, it is usually more accurate to use the average number of shares outstanding. Investors are interested in knowing what the earnings per share is before investing in a company. The higher the EPS, the more profitable a company appears to be. Please remember, just because a company has been profitable in the past does not mean that it will continue to be profitable in the future. What are the earnings per share of your stocks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. However, if you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker, they did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be a passive investor if you start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschoolofinancialfreedom.com. Here is the Southside trading watch list for the week ending July 16, 2022. The strongest performer on the list this week was Riot Blockchain Incorporated, ticker symbol RIOT. It's in the second column. It was up 4.7% on Friday, and it increased 2.01% for the week. Riot Blockchain is focused on gaining exposure to blockchain ecosystem through its cryptocurrency mining operations, internally developed businesses, joint ventures, and targeted investments in the crypto sector. The company primarily focuses on Bitcoin and general blockchain technology. Looking at a summary of results, you can see that Riot has decreased minus 75.06% year to date. I did not trade or generate cash flow from Riot this week, but I have in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 index ETF SPY. The Southside portfolio is down 11.93% versus minus 18.91% down for SPY, a difference of 6.98%. The Southside is beating SPY by about 7%. The cash flow generated by the Southside cash flow system for this week was 3.69% of the portfolio account value. The account value changed by minus 2.56%. Meanwhile, the SP 500 ETF SPY changed by minus 0.91%. Bitcoin watch. Bitcoin lost over 3% this past week and continues to be in a bear market. It has lost almost 70% of its value from its all-time high, which was achieved in November 2021. I sold option contracts on one position this week. It was a call that ranged from $0.00 to $133.38. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week to increase your financial IQ and your understanding of the stock market. The videos are organized in playlists at levels 1, 2, and 3. In the meanwhile, please like, share, and subscribe.